Good morning, everyone, and welcome to the European crossover webinar. And we've seen the dollar ease off a bit. We've seen the euro come in, or not come in necessarily, but come in towards coming in away from that oversold area here. We've been referencing this since last week about this disparity we talked about between the exponential moving averages here and how wide that got before we saw a reversal here. And we weren't expecting a big reversal like we saw from the 1569, but we thought the market could be able to come back. And at least we talked about make it here to 1560, and we've just about made it just right. I mean 1360, and we've just about made it there to 1360. So there's that same disparity, and now we're starting to move a little bit higher here on the euro. Also saw a little bit of news overnight here with the Japanese data, which allowed the dollar yen to go on and make a move up here. Actually, Chev just challenged this 1095 right here. When I was looking at it, I was talking with some of the guys. I've been keeping an eye on this, and we went right up here to the 127%. Got a little bit short, took a little bit short, really just a scalp short. And then I was telling the guys looking for this area to hold here, this 82, which it did initially. We bounced up into the upper 80s scalp-wise. We came down here to test, which was the 78% on the way up, and we since rebounded. Just to touch on that quickly, it says Japan's exports fall the most in 2 years as Asia import shipments weaken. Japan's exports posted their biggest decline in more than 2 years in January, adding concerns about slowing global demand and trade frictions. Ministry of Finance data put on Wednesday, Japan's exports fell 8.4% in the year. It was the sharpest annual decline since October of 2016. Once again, you can look at this in a lot of ways, actually. I mean, we already seen the day before Kuroda had mentioned that they're willing to do stimulus if they were to see an impact from currency moves, which I didn't think that was going to push it that much, and it didn't initially. But like I said, I think I also mentioned if there's a slowness in the economy or no way to gain any inflation, they don't meet their inflation targets. Well, certainly this would put a big dent into that. It says President Trump on said Tuesday that trade talks with China and Washington this week were progressing well, as he suggested he was open to pushing off the deadline to complete the negotiations. Japanese exports to China, Japan's biggest trading partner, fell 17.4% in the year to January. Imports of Japanese cars make up 2/3 of Japan's $69 billion annual trade surplus with the United States, making Tokyo, as well as Beijing, a target of criticism by Trump. And moving back in here, obviously another big mover was the gold market. And that even exceeded what we were talking about. We thought that we may see, which I thought we'd probably see some resistance around 1334. But we even got past even this 1340. And I would have thought that would have been a good level. But I thought we might have got up to here to 1340 and then pull back a bit. But boy, what strength we've seen here. And that our overall, I wouldn't say overall target, but our target that we're looking at has been this 1358. We think the market's going to get there. Well, I thought we would probably take a pause around 1334, maybe ease back a little bit, but man, we did make it run up here to this 1340 area. Coming here, actually, we've even gotten above that, getting up as high as, look at that, 1346 here, just basically almost 1347. So pretty good move here in gold. And an equal pull down pop up here in the cable. Finally got pushing here. Remember, I think it was 3059 was our resistance here for cable. I mean, 2953. So heck, we blew right past that. Look at that if we broke past this trend line. And the other mover, I guess you could say, has been the dollar peso that we've recently been following. And we've just about made it here to the 61%, this 1911. We had talked about the work we've done here, which is 161%. Well, as we broke lower, then the work over the weekend, we were talking about this market eventually getting down to 1911. I didn't know if it'd get down there that quick, but boy, has it really moved down here. Let me take a look at this. It's a little bit further. Nope. Right here's that 1911. It is really scooted down here to the 61%. I think we'll find a little bit of support. And there's a level here that I've drawn. There's just a little bit of demand volume area here. Although we're holding just above the 61%, we pushed back up here. Coming into today, and coming into the States, we did have German producer prices out, but looking here, the key thing we're going to have today is we got the FOMC minutes, but nothing here, although today we do have Eurozone consumer confidence at 10 a.m. Eastern. Move this out of the way. So quickly touching in the news, but boy, what a move we've already had here in gold, and Euro trying to stretch up here towards that 1360-ish area. And dollar yen, I'm even a little bit surprised that they popped up and been able to hold. I didn't want to stick around too long. I was telling some of the guys that at the time, a couple of guys, we had this, get this back here. The 161%, I thought, you know what, with all that was coming down, I thought, heck, we might even pop up here, make a run up here towards 20, and then turn around and fall back. So I didn't want to stick around, but it did go on and pull back here to, like I said, that challenge at 1075, which wasn't a whole lot, but I was just scouting for singles really. But we did go on and pair back. Let's go and just take a quick overview of the news. Morning bid expectations are low for PMA. Brussels trip to find a way out of the Brexit impasse today, with European Commission President Jean-Claude Juncker even staying in public. The chances of progress were slim. A May spokesperson has confirmed she still wants to persuade the European Union to reopen the divorce deal, despite clear statements from EU officials that this won't happen. Will she come back empty-handed, or is there consolation prize of securing some kind of assurance over the temporary nature of the Irish backstop? It's not even clear what would placate the Brexiteers in her own party who helped defeat her deal in Parliament last time. Some suspect May is not really interested in winning new concessions anyway, and will in the end present lawmakers with the choice: my deal or no deal. Emmanuel Macron may be starting to win the popularity battle against the Yellow Vest protesters, whose cause has been sullied by association with repeated street violence and the anti-Semitism. But in order, after surrounding his disgraced former bodyguard, may still come back to haunt him. Alexandra Benel was caught on video last year beating in May Day protester, and Macron and his senior officials face widespread criticism for being slow to come clean on the facts of the matter and deal with it. Moving on to the markets. There's little doubt the world markets are now assuming there's some form of a trade deal between Washington and Beijing this month, or at the very least an agreement to keep talking to avert tariff increases on March the 1st. President Trump said overnight the March 1st deadline was not magical and might be reconsidered. Underlining the all-country world index hit a 4-month high overnight after 3 straight days of gains. The move follows 24 hours of dollar weakness as traders position for today's release of the minutes from the Federal Reserve's last policy making meeting, where its sudden dovish policy tweet is expected to be detailed. The dollar index has hit its biggest one-day loss of the month on Tuesday, before stabilizing overnight after sliding against the euro and the sterling. Dollar yen was the main exception, pushing higher after Japan recorded its biggest annual drop in exports in January for more than 2 years. Worse than the technical forecast, Japan's trade data also reinforced the pressure on U.S. and China trade negotiations. Sterling's gains against the weaker dollar on Tuesday marked its best daily advance of the year, and were mirrored by a rise against the euro. Traders said that the jump back above 130 accelerated buying before UK May meets with European Commission President Jean-Claude Juncker on Wednesday. In Europe, stocks are expected to open higher. In line with Asia, S&P stock futures were flat. And Australian New Zealand dollars rally with the yuan. The Aussie dollar edged up to a two-week high of 71.76 and away from its recent low of 70.54. Australian dollar was mixed with wages missing forecasts in the December quarter, but annual growth in the private sector running at the fastest pace in a year. Bloomberg reported that the White House was seeking a pledge from China that it would not devalue the yuan, sending the currency higher. There's a positive for the Aussie as investors tend to use it as a liquid proxy for the Chinese currency. Let's see here. New President John Williams said he saw no need to hike U.S. interest rates unless economic or inflation shifted unexpectedly higher. Excuse me. And sterling, of course, as I said, shoots above 130 after edging higher much of the day, then jumped into European trading, rising almost 1% versus the dollar. Against the euro, the British currency added 7/10 to 86.93. Some strategists point to media reports that May was dropping the so-called Malthouse Compromise. Markets appear to have taken a media report as a sign that Britain is becoming more realistic in negotiating its agreement with Brussels. Nomura analyst Jordan Rochester said in a note to clients amid broader hopes the EU and UK are making progress in her talks. Excuse me. And also, this just came out just shortly. It says the European Central Bank will discuss very soon whether to provide a new round of multi-year loans to banks, but may not immediately decide on their terms. The decision will come very soon in the Governing Council. It doesn't mean we'll take decisions at the time, perhaps set in a targeted long-term refinancing operation. I think clarity for the banking sector is important, but not necessarily on the parameters of the TLTRO. And on to the dollar. It struggles before the Fed minutes. The euro chart at 13.50, but was struck within recent ranges. However, we expected limited downside in the euro because weaker than expected eurozone data had only had limited negative impact on the euro, and most of the weakness is reflected in the price. Sorry about that. The dollar is weighed with the treasury yields on a downturn. Attempts by participants to price in a potentially dovish FOMC minute meetings are also keeping the dollar on the defensive, said Yukiya Ishizuki. And lastly, in regards to the gold market hitting there, we were aware of that. Dollar was capped on falling U.S. Treasury yields, which is also a thing that you would have thought that may have kept the dollar yen from moving too much higher as yields move lower. So let's moving on. Let's go on and get on with the analysis. So we had 1360 as our resistance and 1280. Well, these pretty much hit the lows and the highs right here. We dipped, I think, below 1280. I think we got what I was 1277 or 76. And the high up in here so far, I think been around 1357. So we've been able to keep this within a pretty good range here on the bias chart. So you can see here the importance of this 1360. Now, with the FOMC minutes, if they do come up a little bit on the dovish side, which the market's already kind of playing in, and we've come off these lows, but we haven't had like a great rally to speak of. Let's go moving to the 2H. Well, this is that pivot that we had before, essentially, the 1380. Let's see how far we could go on a rally on this. This happened to coincide at the time with the 38%. This 1360 on 1380. It's just I'm wondering if they're playing a little bit of dovish, and as I mentioned, I think anyone might be kind of somewhat stuck, and I think that we come up here 1360 is kind of like their uncle point, where they want to go on and get out. Well, Blake, I saw where Blake had mentioned that a lot of the CTAs are short the euro, and I can see why they would be the short if you were thinking about how everything's been going. But as the story kind of indicated, is we're just not seeing the euro react negatively anymore to the bad news. I mean, we're not seeing the news has kept coming bad, and so I've got a really dry throat, throwing down a lot of water. And we did go and take that dip last week. And the key thing was, remember on Friday, when we went sub 1250, you would have thought this thing would really capture some momentum. And we simply didn't do it. And we're diverging, from that in the sense this is a bit reminiscent. Remember how gold was pulling down when the dollar got stronger? This was like over a month ago, a month and a half ago. But even when it was kind of like doing it begrudgingly, like trying to pull a dog on a chain. The dog didn't want to go. Well, and that was the gold moving lower, and it ended up well. And when you look at the euro right now, it's kind of the same thing in the sense that the news has been rather negative, but we've held up in the sense that we haven't broken new lows. And then when we got from a technical standpoint, which is over here with these EMAs, we've actually held up overall. I mean, we haven't really gone gangbusters, but we have come back to the area we were talking about, at least for starters, at 1360. Now, how much further we can push? Well, I think that might be the people that, like Blake was mentioning, the CTAs that might be short. They may have to come in and pay the piper. I think they're going to pay the piper probably a little bit around there, which is 1386 is probably their uncle point. Like, right, I'll show you here. Right there might be their uncle point. If we get past this 13.9, that's going to be the point where it's landing. That's it. I can't take the heat anymore, because you have to think they can take the heat a lot better than others. Okay, so they'll probably be looking on a daily, and if we go there, because today's the FOMC minutes, so we have to see where could we stretch to. Well, it looks like it'd be this 1392. I think that's going to be their uncle point right here. 1392. If they're still short and they're saying, look, once I get past this area, I got to get out. On a daily close above 1392, I got to get out. Well, I'm not sure how much is going to be priced in on this Fed and how far they want to push it. The 50% would be 1402. For today, I wouldn't get in the way of the euro. I thought we were going to get 1360, and I was going to go on it. I'd mentioned I'd like to. Someone's asking me yesterday, was I still scalping it short on the long side? And I'd just gotten out at 1343 on a very small scalp, and I had an area here I wanted to go on and short it if it hit 1360. I thought we'd drop back kind of quickly, and then as we hung around here and I thought, okay, wait a minute, I'll wait for 1368 here if it got. It didn't make that move. And we're kind of holding here. It looks like this market really wants to push higher. And same thing here. When you're this close, it's generally not going to be satisfied with just 1360 then, I would think. So for starters, the 1380. But I would think we'd be able to push back past that with the FOMC minutes. So we're going to go with right there. 1389 will be today's bias chart resistance. 1402 is the 50% of this overall move. But we'll go with 1389. And then for support, we'll go right there, 1314. 1314 for support. Well, we did go in and break above this trend line. We've had a pretty good run. Look here, 3062 is that. Wow, we're right there. There's that key level. Let's go with this. This 3062 right there. Obviously, if the dollar index, I mean the FOMC minutes, we push the dollar, we're going to push higher. But for right now, keep an eye right there at that 3062. We got up as high as what, 3075, but 3062 is, and look where we're at right now, 3038. If we see the dollar come under some pressure here, we're going to give it some room because of the FOMC minutes. Although that 3062 is key, but the same thing with the euro. If the cable gets moving, it's already had a pretty fabulous run. Although we've broken this trend line and the moving averages have turned up, and we'll just go with this 3098 for now. And support will be right there, 2974. We did have par 08, and there's our par 08. If the dollar goes and pulls back a little bit further here, same thing whether the dollar goes and pulls back further. We're going to go right here with 99.70. And resistance is going to be right there, par 32. Well, the Aussie has definitely jumped up higher, despite the weakness in the data and the dovish tone of the RBA. They're focusing more on this whole expected. We keep expecting. I guess because they know both sides need it terribly bad, which is the good news on the China-U.S. talks. Heck, even the idea of an extension of the March deadline is enough to push this market even higher. But resistance comes in right here at 71.79. We could push higher if the dollar weakens after the FOMC. So we'll just give it just a clip above there, just a clip, which is going to be 71.92. 71.92 would be our resistance. Let's take a look on a fib also. Well, the 61% would come in there at 72.05. So we'll go with the 72.05 on the resistance here for the Aussie, thinking that the dollar would weaken after the FOMC minutes. As far as support here on the Aussie, would come in right there at 71.17. 71.17 right now. Actually, right. We'll call it right there, 71.19. And the dollar CAD's already taken its tilt lower here. Let's take a look at here on the 2-hour. And crude oil is still maintaining its. We had the 56.05. It's still hanging there close to those highs. This market's kind of got a little bit of the double whammy because with the crude oil still pushing higher, or even at the very least holding on right at these highs, and then the dollar potentially going lower with the FOMC minutes, it's really putting this difficult situation. At this point, we have to be looking at 31.52 here as a downside area for this market to target. Upside for now is going to be right here at 32.42. 32.42, and really for us to push back up to this, essentially, which is almost like a bias pivot, we're really going to have to get this oil to turn down, and it's just simply not turning down at this point. And let's take a look here with the dollar peso. Well, here's the area of support that we're looking at here, which is the 61% of this entire move here. And certainly this market is really broken down quite a bit. And obviously with the dollar weakening, that exacerbated it. On top of that, with oil too, and just seems like, although this market has a tendency to just go the other way quickly and then turn around and resume the trend is going, but I think that I wouldn't really want to be interested in this market until, and really there's a dip just below that, which is 1909. Right there, it's almost 1910. Yeah, 1909. I'd want to see them, especially see when we get this close to the 1911, the 61%. To me, I think if you break here, they're not going to be satisfied just going there and quickly jumping back, because they've already done some work to come back here. And if we do turn down, so I think we end up having to want to push lower, and that low would probably take us down to about right there, 1908. So we're going to go with 1908. It's a little ways down, but don't forget the dollar's expected to be under pressure anyway. So 1908. And as far as an upside, right there, 19, just call it 19. 207. And let's go and move on to crude. This market continues to hold up like a champ. We've kept our 5605 as our resistance. Even when we got above it yesterday, we've still stuck to our guns with 5605. And the 5605 seems to be holding. I mean, the market's open to moving higher on a daily basis. We already pointed this out earlier in the week, but we had pushed so far, it just seems like, and here's that 5605. It's open to going to 5718, but it's just so far hasn't done it. And we'll see what plays out. I guess they're hanging around for the China news too, but with these economies slowing down, you got to wonder. I mean, look at the Japanese exports. I mean, their exports are the worst since 2016. But you know what? Let's keep that oil going. The economy's going. Okay, Europe's slowing down. I know, but let's keep that oil going. The economy, it isn't. So that's what I'm saying. Is just really, technically speaking, you can't doubt it. But we're here at this 5605 that we've had in place, and that's where we came up with it. Is here, and the market's respecting those technicals. I just don't see how it's still hanging around here. The only thing I think that maybe they can hang their hat on is after the FOMC minutes. the dollar would work a little bit lower, and obviously crude for the most part. I mean, WTI obviously crude priced in dollars, so a weaker dollar will give them a little bit of an extra boost. But that's the only thing. See what they're going to hang their hat on if these global economies are slowing and continue to slow. So this is just, to me, it's a head scratcher. Although technically it's moved higher, it's been able to come back, but I would definitely be concerned with this. We're going to keep the 56.05, and then for downside support, obviously equity markets holding up has certainly been supportive for this. And for now, we're just going to keep this 55.03. Actually, work it just a little bit lower here for 54.90. Well, we saw the dollar yen going and pop up on that poor Japanese trade data. We're actually starting to slide back in here. You can see this pulling back. We were just a little while ago at almost at this 10.95 right there. And one of the things that we referenced, the same thing yesterday in the news that we referenced, is that the gentleman was saying, hey, it's going to have a hard time with these lower U.S. yields. And so when we made that rally up there above 90, I was mentioning to the guys, hey, look, the FOMC minutes are tomorrow, because I was thinking, hey, this is going to put a lid on this thing. But it was certainly, for the most part, Asian trading has been relatively quiet. So I was thinking, I don't want to get caught on the wrong side. So I was happy to scalp it, because I thought, you know what, let's just, the market's been quiet for a while. And we held here at this 10.50, thought, well, okay, when we was looking at the work yesterday, it was actually on this chart here, and I posted a couple times in the room. So on the way up, and really I did a poor job of just not playing it on the way up, because I thought this thing's going to really want to move higher. And I saw when he's making a move here, I'm thinking, okay, well, there's a 61% still. The market's just moving a little bit higher. Actually, when we got the news, it started pushing up a little bit further. And then I thought, okay, well, here's a good good area, but still was leaving it alone, because I thought what I'm looking for is just to make it to 87. And if you remember, our bias chart yesterday's support was resistance was 1088. So I'm thinking, okay, I like that 1089 to show you here. And they jumped up quite a bit and started pushing in here. And I thought, okay, well, I ran this real quickly and said, okay, it's 127%. That's where they're probably going to go to. But we hung around here for a little while, and I thought, okay, they're going to come back into 82, which they did. I didn't hang around, took off half around here and another half right actually at the 83. I thought they'll probably come back up into the upper 80s, which they did, but I wasn't going to stick around that time, because like I said, the market's been acting a little bit too quiet. And I thought, you know what, they can, if they want to, make a run up here to, well above 11, and then turn around and fade back. And with this dollar yen being relatively quiet, I'm thinking I don't want to hang on for that. I'd like to go where there's some additional momentum and participation. But we did make another run up here for these highs here, and we've run out of gas. And if you look at it on the 2-hour chart, well, 1095 is a level there for us. I'm surprised it made it up that high. That was the key thing. But it did. And we're not way off. We're about 20 pips off, but if you're trying to scalp around. But once again, it's been so quiet that you got to be a little bit careful with this dollar yen. When it gets very, very quiet like that, boy, can it rip. And so I said, okay, I'll grab a few nickels off it, and that's it. So resistance right now, it's a little bit tough to say right here, because if the dollar's going to come off, you wouldn't think we'd be able to move too much higher. Okay, we'll go with this 161% here, just to throw a number out there, because I do think the FOMC will probably come in a bit weaker, although we'll see how that plays out. You see right there, that's 161%. So we'll just say right now the resistance will be, let's just call it 1103. This is another one that worked out fairly well as far as the buy chart resistance / support. Here's that daily level, 1034. We're going to go with that for the support, or keep that as a support, which is 1034. And we'll move into the Aussie Yen. Well, they've really pushed this higher here, and it looked like it didn't want to go there. But we had 79.40, and we're able even still to continue to push it. Well, you know, we can certainly see why with the way these S&Ps have held up. They're just simply amazing, to be quite honest with you. I'm just, you know, not to go overboard with the hyperbole, but I'm astonished that they've been able to hold at this level. I mean, what was it? I saw that. I think I saw 2780 something yesterday. Resistance here. I guess they're just same thing, waiting here for that good China news, I guess. Resistance is going to be. I would go right there to 79.75 because they may take the S&Ps may even rally higher on a weaker dollar. So I'm going to go with, and once again, it's all because we're spreading these out a bit because of the FOMC minutes. I think that will be a driver today. So we'll go with 79.75. For stars, this would be the support, 78.83. The dollar's been a tricky one over the last, two and a half weeks here. Here's that support level we talked about, that pivot. It's going to be 96.30. Let's take a look at it on the 2-hour chart. Obviously, today could be a big mover with the FOMC minutes. There's our old trusty friend here from before, 96.24. We're going to use this right here, 96.24. I like the 96.30, but because of the FOMC minutes, we'll try and make one and push this for a little bit further than what we would expect. So 96.24. I wouldn't give it that much on the way back up. So we're going to go with 96.82. 96.82 right here. You can see that coming right across. 96.82 on the upside. We can already see the momentum has shifted lower here. Well, our upside here is 1358 from the beginning of the week. I thought we'd take a pause here at 1334-ish right there. Even the 41, I saw that yesterday. I thought, well, that might be stretching a little bit too far. I mean, it's obvious, but okay. But I thought we'd probably make it to 1334, maybe pause a little bit, ease back, maybe wait for the FOMC minutes. But the dollar was already easing off, so we've talked about how gold has been positively diverging from the dollar. So we're pushing it. So it's really up here at 1358. That's what we're looking at. Now, that seems like a pretty good ways from here. But if this dollar weakens, this gold's really going to rip up. So we're actually going to go and push this to that target that we had at the beginning of the week, which is 1358. And support's going to be right there, the old breakout area. Well, not breakout, but the old target area, which is 1323. Confluence with 1322 to 78%. That will be support. Well, this thing has been on one heck of a tear. It doesn't look, there's nothing there to suggest that we pull back in the sense that the dollar is likely to go on weaken after the FOMC minutes. And from here, we'll go and move into the buns. Well, we're still holding up relatively well. We did have our support yesterday. It was a 69.629. Yeah, 29. Looks like we made it, to 24 or 23. For right now, there's support 66.54. That'll be it for the buns on the upside. We'll pull this back in just a bit. A lot of volume in here. If we were to pare back just a little bit, although the upside is still in force, but if we were to go and pull back a little bit, it comes in. That might even be a stretch at this point, the way the buns have been holding up very, very well. It almost seems like this market wants to just really push hard toward it at 66.78. We'll go right there with 66.14. We may be a little bit quiet until FOMC minutes, though we have some data. At 10 a.m. Eastern, Eurozone consumer confidence. That could be important right here in light of the way things have played out. So keep that in mind. We might see the euro fade a little bit ahead of that. And the DAX still responding, to this positive equity markets globally. Looking here on the DAX, and this is good resistance level in here. Just let me see if we had that listed as yesterday. 11,360. You see right there, that little nip right there? That's 366. I'm going to keep that. I'm not keeping it, but that'll be it. Just going to move it 6 ticks higher. And moving into support. Boy, nice run up in here. Look at that. Support comes in right there, 11,286. A little bit of a wide spread there. Gold just on the precipice of just trying to really even blast beyond 1350. With the euro, keep an eye on this. Really between this, it's going to be between 1368. The problem is that we've come so close here that I think we trigger these stops, we're going to go well beyond that. And so our resistance is actually going to be 1389. You might see a little bit of pullback ahead of that consumer confidence. That's going to be 10 a.m. Eastern. And obviously the dollar on its own little pullback. And if we do get that dip, we're looking around 96.24. I'll get this posted into the room. Thanks for joining us here on the European Crossover webinar, and good luck trading.